All right. Hi, everyone. Welcome to today's session brought to you by IronFX, where today the topic could be on breaking news and setups. Right. Before we begin today's webinar, just please take note of the disclaimer and the risk warning, right? The information is not considered as investment advice or investment recommendation, but instead is just marketing communication. And also take note of the risk warning over here that the products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. Right. Before we begin today's webinar, right? Okay. My name is Ketan Ramachandra. This webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right. Today, let's take a look at what's coming up on the calendar for Thursday and Friday, right? We just had GDP data for the UK being released, as well as inflation data, consumer inflation data for Switzerland. So we'll take a look at how those results have played out and how it will impact the respective currencies. Then later on today, we've also got US Producer Price Index and unemployment claims coming up. And on Friday, we have retail sales. Now, here's the calendar for today, right? So we can see that GDP data for the UK was released at 7 a.m. GMT time on Thursday, 13th of February. And that was we saw GDP output increase stronger for the month of December, right? GDP output growing 0.4% month over month as compared to the forecast of 0.1%. And also it came in much higher than the previous month's figure as well. So this is quite likely to have functioned as a strong bullish catalyst for the pound. So later on, when we head over to the charts and trading view, we'll see if there's any opportunities to take advantage of the stronger than expected GDP data. Then moving over to Swiss inflation, consumer inflation in Switzerland was released at 7:30 a.m. GMT time, where we saw inflation decrease 0.1% month over month in January, for the month of January. So this inflation has set into Switzerland, and this is very likely going to put downward pressure on the franc. So let's see if that has actually played out in the markets, right? We're going to be looking at dollar franc. And of course, later on today at 1:30 p.m. GMT time, we're going to have PPI data, which is Producer Price Index, and unemployment claims coming up. So let's take a little closer look at, before we look at unemployment claims, we had Consumer Price Index or CPI released in the US yesterday, Wednesday, right? And we saw a very hot figure, right? We saw headline CPI and core CPI both increase higher than the respective estimates. And at the same time, we saw headline CPI and core CPI accelerate on an annualized basis as well. So inflation, price pressures are continuing to push higher, right? And CPI is accelerating in the US. Now, could PPI follow suit, right? It's quite likely PPI could also come in hot as well. So that means we may have a combination of, we may have another bullish catalyst, right? Another potential bullish catalyst for the dollar later on today. And combined with unemployment claims, which is going to be released at the same time at 1:30 p.m., right? The forecast for this week points to a reading of 270,000, right? So unemployment claims are basically a labor market metric, which tracks the number of Americans filing for unemployment benefits. So if this number is increasing, as what we saw in May till July of last year, right? A rising number of claims signals weakness in the US labor market, and typically that functions as a bearish catalyst for the dollar. And conversely, should claims start to trend lower, as what we saw between July and October, and then again in mid-October till to the present time, right? We see claims trending lower. This typically signals a stable or resilient labor market, which in turn functions as a potential bullish catalyst for the dollar. So this is how we can interpret unemployment claims. And with the forecast for this week, or the forecast for the latest reading coming in at 270,000, not only is it lower than the previous week's figures of 219,000, it's also sitting lower than the 12-week average of 280,000. Right. So how can we interpret the data? If claims come in higher, right, especially comes in significantly higher than the forecast of 270,000, this is typically going to function as a bearish catalyst for the US dollar. Remember, higher claims signals weakness in the US labor market, and typically that would be bearish for the dollar. So naturally, we can expect currency pairs like the euro, pound, Aussie, Kiwi, and gold prices to rise. Now, conversely, if claims come in much lower than the forecast of 270,000, remember, lower claims means a much more resilient or stable labor market, highlights a strong economy, which means which typically means it's going to function as a bullish catalyst for the dollar. So of course that would mean currency pairs like the euro, pound, Aussie, and Kiwi, along with gold prices, are likely to fall. So take note of how we can interpret this data point, because the combination of unemployment claims and PPI later today is definitely going to inject a lot of volatility into markets. Right. So since we've had uh, GDP data out of the UK being released, as well as consumer inflation data for Switzerland, let's take a look at these two currency pairs first and see if there are any opportunities to take advantage of at the present moment. Right, so now let's dive into the charts and trading view. Right, moving over to British pound US dollar, otherwise known as the cable, right? This currency pair can also be known as the cable. And we see today's candle in the green, right? We're starting off the analysis on the daily time frame, because we can see that quite clearly this currency pair has been trading in a series of lower highs and lower lows, and it also continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. So that's a very important perspective to take as well, right? We need to realize what is the overall trend, what is the overarching trend, and the overarching trend at the present moment is is trading in a prolonged downtrend. But at the same time, right now that we look at a slightly shorter time frame between middle of January, we can see cable has made a nice retracement to the upside. Right, we can see it has stabilized at around 1.2160 in mid-January and has retraced higher. So what was previously this currency pair trading in a significant or in a major downtrend, right? We can even establish a nice bearish channel, right? But we see a nice bullish breakout taking place at the end of January. So once the bullish breakout took place, what was previously a barrier, right? The upper trend line of the bearish channel was functioning as a resistance barrier, but with the bullish breakout taking place here on 24th of Jan, right? Once the bullish breakout takes place, typically this extending line can typically function as a support area once the breakout takes place, which is what has played out quite nicely, right? It's not perfectly, right? It didn't find support at exactly the upper trend line of the previous bearish channel, but it found support around that region and looks to be heading higher. Now, once this bullish breakout has taken place, right, we can identify a nice bullish channel as well, right? We can see since mid-January, cable has respected this bullish channel, right? So this, oops, hang on. So it's important to identify the overarching trend as well as this current bullish breakout that has taken place, and to see whether this retracement is going to be going to gain further traction, or is it going to stall within the Ichimoku cloud and reverse to drop lower? Remember, the Ichimoku cloud itself, when it's red in color, highlights bearish momentum, and the red cloud itself can function as an area of resistance. So take note of that. Although we are seeing a nice retracement to the upside, uh, cable is currently trading in a nice bullish channel since mid-Jan, but we see it approaching the red Ichimoku cloud as well, which could pose some resistance for this currency pair. Now, we had strong GDP data, better than expected GDP data released at 7 a.m. GMT time. So now let's, okay, before we move on over down to the 1 hour time frame, let's establish the key resistance levels first. Right, okay, I think we can remove this bearish channel, but what I would like to highlight would be this descending trend line, and but instead it will be in green, right? Because now it functions as a support. Once the breakout takes place, it is likely to function as a support, which is what it has done on Monday, 3rd of February. Not the cleanest level, but generally you can see that the trend line has managed to offer some support, right? Okay, in terms of resistance, we can see that since 24th of January, cable has pretty much failed to break above 1.2500, right? We can see that quite clearly. And when I stretch it across all the way till 22nd of November, it actually looks to be like a very nice overlap resistance, right? It looks to be a very nice overlap resistance at around 1.2510, right? So this is how we've identified the first resistance for cable on the daily time frame. Second first support, right, would be this swing low here, which is almost like another overlap, right? There's a nice swing low, or if you stretch it all the way back here, this is actually a very nice overlap at 1.2368, which we can identify as the first support. And we can see oops, hang on, just let me, yep. We see a nice swing low taking place here on 22nd of April, 2024. We see another bounce taking place here on 2nd of Jan this year. Then we see resistance on 22nd of Jan. This one here on Monday, 3rd of February, of course, didn't really offer any support here. But we can see as recently as this week, 11th of February, cable bouncing off this level once more. So this gives us quite a high level of confidence that this overlap at 1.2349 is indeed a strong support, and we can identify it as the first support here. Okay, so these are the first support. Second support would simply be this major swing low that was formed in mid-Jan at around 1.2164. Right. In terms of the second resistance, I see another nice overlap at around 1.2617, right? We see support taking place here in December, at the beginning of December and in mid-December, after which once price broke underneath it, it functioned as resistance from 20th of December till the 30th. So this is a pretty decent overlap as well, which we can identify as the second resistance. Right, now that we've identified the major resistances and support levels on the daily time frame, right? Now, oops, what's this candle here? Okay, now let's move on over to the 1 hour time frame and take a look at when the data was released. When data was released at 7 a.m. GMT time. So let's take a look at that. Let's mark that on the chart. Let's look for 7 a.m. GMT. There we go. That's this candle right here. So cable was trading at around 1.2480 before that. And as soon as the data was dropped, we can see a nice spike with this currency pair rising as high rising as high as 1.2517. It managed to break above 1.2500, hitting a high of 1.2517, but looks to have pulled back. Right, it pulled back quite sharply, and where it stabilized is at this pullback level here. Right, when I look at 1.2477, this is a nice pullback level. Why? Because this level previously functioned as a swing high resistance yesterday, Wednesday, 12th of February, and let me just make this a little bit more clearer, right? Swing high resistance taking place yesterday, Wednesday, 12th of February, and when the bullish breakout took place earlier today, right? What was previously a swing high resistance can potentially be a support area, which is what has occurred in the most recent two candles we see, right? On the 8 hour at 8 a.m. GMT time, cable falling sharply towards the pullback support, but it has managed to stabilize over the last two candles. So what we have now is a potential bullish bounce to play the continuation uh, of the rise in cable due to a strong fundamental catalyst, which is GDP data coming in stronger than expected, right? So we have a nice fundamental catalyst functioning to lift this currency pair, and at the same time, we've also seen this currency pair stabilize at a pullback support, which is at 1.2477. Now, on this uptrend here, right now, there's a couple of uptrends. The first one, we can run it from this swing low. So for this uptrend here, I'm going to run a Fibonacci retracement, starting from this swing low on 12th of February, going up to the highest point here. We can see that the 61.8% retracement aligns very well. Oops, hang on, no, that's not it. It's starting from here. Apologies. We can see that, okay, this pullback support level at 1.2477 is sitting in between the 23 and 38.2% retracements. That's fine, right? Don't force the Fibonacci retracement onto the analysis if it doesn't line up well with a predefined support. Remember, we're always looking to identify significant support and resistance first, right? Always look to identify key resistance and support levels first, and then run the Fibonacci retracement. And should we see that retracement level aligned very well or very close to where we had identified a predefined support or resistance, then we're going to use it. But in this case here, in the case of this pullback at 1.2477, this is we can see clearly it's in between the 23 and 38.2% retracements, and we're not going to use that. However, where I see 50% sits pretty close to this little consolidation period here. So I would just keep 50% on. But just to remind myself that we can see here this little consolidation phase here that occurred late on Wednesday aligns pretty close to where the 50% retracement sits. But for now, right, we've seen cable react very nicely off the pullback support. It looks to be climbing higher, so we've got a potential bullish bounce opportunity in progress. And we also have a fundamental catalyst for cable, right? We have stronger than expected GDP data. And since we've also identified the first resistance at around 1.2510, this is where we would identify the take profit target, right? So we have a potential bullish rebound opportunity for cable backed by fundamental catalysts, stronger than expected GDP data. And we can target the first resistance at 1.2510 as a potential take profit target, right? Then, of course, right, first resistance here. And of course, should this currency pair climb even higher, right? There's another swing high resistance that is taken place on Tuesday, 7th of Jan. Right, this is where I would identify another resistance barrier, right? So should we see or I would identify something since we are doing the analysis on a 1 hour time frame, the next resistance barrier that I would identify is this swing high resistance that has taken place on Wednesday, 5th of February. So that means that we can use this level here as a second take profit target. So first take profit target for cable is going to be for the long trade is going to be identified at around the first resistance, which is at 1.2510. And of course, if we see this currency pair continue to climb higher, we can then target another swing high resistance which has taken place on 5th of February. That's at 1.2540. So targeting a second take profit target at around this level would be a suitable area to do so, right? So take note, this is the current setup for the cable. And before we move on over to dollar franc, I would also like to highlight, right, we have a nice ascending trend line as well, right? Not, yeah, pretty good ascending trend line here, right? We can see cable coming close to this ascending trend line earlier this morning, Thursday, 13th of February, and then bouncing off the intersection of the ascending trend line and the pullback support very nicely uh, uh, in the most recent candles. Friends, you can see here, right? Let's zoom in a bit, right? A nice intersection between the ascending trend line and the pullback support, identifying a nice support area. So this is where the rebound has taken place quite nicely. And we can probably expect this currency pair to climb higher with the first take profit target identified at around first resistance, 1.2510, and the second potential take profit target identified at around 1.2540. Right, okay, so these are the key levels here for the cable and the current opportunity based on the stronger than expected GDP data out of the UK. Okay, now let's move on over to dollar franc. Since we've had CPI data being released, CPI data showed disinflation in Switzerland, right? We saw inflation falling, of prices dropping 0.1% month over month. Typically, this would be bearish for the franc, right? If it's bearish for the franc, it would mean that the currency pair, dollar franc, should be climbing higher, but instead, we're actually seeing significant dollar weakness. We're seeing significant US dollar weakness, which has caused this currency pair to drop quite sharply today. So if we go over to the 30-minute time frame and take a look at when Swiss CPI data was released, that was at 7:30 a.m. GMT time, which is this horizontal line here. So you can see here, despite softer inflation, right? Despite softer inflation, or rather disinflation, instead of the franc weakening, the franc has continued to strengthen. I think this is more due to significant dollar weakness rather than the franc strengthening, because I think we're seeing general dollar weakness across most of the currency pairs, right? You can see here euro is starting to rise again. Cable also, of course, is rising. Dollar yen is also falling, right? Dollar yen falling signals a weak US dollar, similar to what we've seen for dollar franc. Dollar franc really is dropping lower as we speak, right? It's really diving quite sharply. All right, so let's identify the key support and resistance levels, right? For the dollar franc, right? Starting on a daily time frame, right? So we can see since October 2024, right? We can see this currency pair moving in a very strong uptrend, right? Moving from bottom left to top right. We see a series of higher highs and higher lows, right? And we can also see that this currency pair continues to trade above the green Ichimoku cloud, highlighting the ongoing bullish momentum, right? Now we can see that this level here at about 9.9150 has functioned as a multi-swing high resistance since 23rd of May, right? You can see it's a very significant resistance barrier. And if you look at it here, actually it captures this swing high resistance that has taken place right at the end of April 2024. Right. So the first major resistance for dollar franc sits at 191.94, right? Almost close to 92 cents. Why? Because there's a swing high resistance being formed here on 30th of April 2024. And then as this currency pair rose strongly in January, by mid-Jan, it touched this level once again, but it stalled at 91.94, made a bearish reversal, made a third attempt to break above the first resistance, but it failed once again. So you can see very clearly three multi-swing high resistances. Let me just point it out. First swing high resistance here in April 2024, second swing high resistance in mid-January of this year, and third swing high resistance here at the beginning of February. So very significant multi-swing high resistance. Now, we can see this currency pair falling towards 9000, right? And when I look across this level here, I see a very nice overlap. Why is that? This is a nice overlap that we can identify as the first support because previously it functioned as a resistance here at the end of December. And then once the bullish breakout took place, right on 30th of December, this level proceeded to function as support not once but three times. We can see here the first on 6th of January, the second on 27th of Jan, and the most recent one last week, 6th of February. So this creates a very nice overlap level at 90.09, which we can identify as the first support. Now, second support is another overlap, and that level sits at 89.12. Why is that? Right. Once again, we see a resistance taking place here in July 2024. After that, this resistance level stalled the dollar franc once again in mid-November. Of course, here at the end of November, it actually made a bullish break, but it failed. This was a failed breakout, right? Prices pulled back, and then it made a second attempt to break above this level, and this a third attempt, sorry, and then this time it was more successful, and then it functioned as a double bottom here before bouncing higher. So you can see this is a pretty significant overlap level at 89.12, which we can identify as the second support. Now, what this first support also tells us is that since the dollar franc has been selling off very sharply since the beginning of today, right? And if you manage to short the franc, right, as of earlier today, perhaps during the Asia session, you've shorted the dollar franc, and I see it rising, falling towards a overlap at 90.10. This is where I would identify a take profit target for any short trades that you may have. So anyone who's short on the dollar franc today, right, I would identify my take profit target just above 90.10, right? Just above 90.10 would be a suitable area to identify a take profit target for any short trades that you may have for the dollar franc. Right now, with it falling towards this support again, right? Should this level hold, because we have a nice overlap level that sits within the Ichimoku cloud, right? We may have a potential bullish bounce that could play out maybe by tomorrow, right? So in the current, at the present moment, right? Dollar franc is falling, and if you've already shorted the franc, if you've already shorted this currency pair, I would identify a take profit target at above 90.10 for any short trades. And at the same time, perhaps by tomorrow or maybe early next week, if we see dollar franc stabilize at around the first support and within the Ichimoku cloud here, this is where I would identify a buy opportunity as well. We may have a potential bullish bounce for this currency pair that may materialize by tomorrow, as early as tomorrow, or perhaps by Monday. Now, on this uptrend here, we can run a nice Fibonacci retracement, right? Remember, we're running the retracement after we've identified key support levels here. Okay, right. So we're going to be running the retracement from this swing low on 6th of September, going up to the swing high on the 13th of Jan. When we look at all the fibs, we can see 23.6% aligns very well with the first support, and 30 sits a little bit too far from where the second support sits, so that's fine, right? We'll keep 23.6% here. right? And highlight this as a zone. And at the same time, there's another nice uptrend that we can begin from this swing low that has taken place on Friday, 6th of December, going up to the same intraday, going up to the same swing high resistance. I think this didn't capture it. Yep, there we go. Yep. Actually, you can see the 33.6% retracement aligns very well with the overlap support at 90.09, which is also the first support. Now, we've run the second Fibonacci retracement starting from this swing low here on 6th of December, going up to the high on the 13th. Once again, when we look at all the fibs, right, we can see 38% sitting pretty close to the first support, but because we've seen the candles close below 38.2%, we're not going to use that anymore. It's fine. 50% is in no man's land. However, 61.8% sits very well with this other overlap, which is at 89.12. So for this second retracement, we're just going to be using 61.8%. You can see this retracement level aligning very well with the second support. Right, so once again, these are the key levels for the dollar franc on the daily time frame. We're seeing it fall sharply towards a significant overlap that's accompanied by Fibonacci retracement at 23.6%. So if you've managed to short the dollar franc, perhaps a couple of hours ago, or perhaps even from during the Asia session, right? I would recommend identifying your take profit target slightly above 90.10, right? For any short trades, identify your take profit target there. And of course, over the next couple of trading days, right? Over the next couple of trading days, if dollar franc manages to stabilize around this region, it may help us identify a potential buying opportunity as well. So looking for potential rebound for this currency pair. Okay, now let's move on down to the 4-hour time frame and see if there's any uh thing to identify, anything else to fine tune and identify. Right, we can see here from 5th of February till today, right? There's a nice uptrend. We can run a Fibonacci retracement from this swing low here on 5th of February, going up to swing high on the 12th. Right, what I would like to highlight is probably the region between the 50 and 61.8% retracements. Right, this could be a potential support level here. Right, we can see here the current 4-hour candle sort of stalling within this zone here. However, should we see it give way, right? If it breaks through the 61.8% retracement, I think we can have further confidence that this currency pair will drop much closer to the first support. So take note, this is like a downside confirmation zone, right? This support zone as identified by the 50 and 61.8 retracement levels will function as a sort of like downside confirmation. If we see a clean break below this zone, I think we can have further confidence that this currency pair will drop much closer down to 90.10, right? Perhaps down to 90.20, 90.10. Now, on this downtrend here that begins from 3rd of February, right? I believe there's a Fibonacci retracement that would identify a potential resistance barrier here, right? So let's try that out. Starting from this swing high, 3rd of February, going down to the swing low on the 5th, looking at all the fibs, we can see as dollar franc was climbing higher earlier Thursday, right? It smashed through all the retracement levels, but you can see this candle here stalling, the wick of this candle here stalling at exactly the 78.6% retracement, right? So you can see it smashed through all the retracement levels except 78.6%. And this is where dollar franc stalled today. So I would also like to highlight this as an intermediate resistance, right? Intermediate resistance barrier that's accompanied by a 78.6% retracement. But actually, yeah. So that's fine. Right. Okay. So once again, the current trade for dollar franc is or the current bias for dollar franc is to the downside. And if you've managed to open a short position for this currency pair, right? Maybe over the last uh as European markets came online, or perhaps even as early as the Asia session, if you manage to short the dollar franc since then, right, you're probably sitting on a pretty good profit, right? Especially if you shorted it from around 91.20, right? Probably about 40 pips in profit, right? So at this point here, I would recommend to trail your stop loss, right? Trail your stop loss, move it down to break even or slightly below the break even point, right? To protect the position. And should this currency pair continue to fall even lower, I would say continue to trail your stop loss, moving it closer, moving it further down, further lower, and hopefully if it gives way, if the downward pressure causes dollar franc to break through the 61.8% retracement, then I think we got a good chance that it could hit around 90.20 as well. And then that would be a good area to exit the short trade that we currently have in play now. Okay, so this is for the dollar franc. And then let's move on over to the dollar index, right? Since we've got PPI data and unemployment claims coming up. So let's take a look at on the 30-minute chart first. This is quite interesting because at 1:30 p.m. GMT yesterday, Wednesday, 12th of February, this was when the CPI data was released. US CPI data was released at this time, right? And we saw a much hotter than expected result, right? We saw inflationary pressures accelerating in the US, triggering strong demand for the dollar, and that caused the dollar index to spike as high as 108.52. Right. However, we saw in the next candle, right, in the 30-minute candle, the next candle reverse abruptly and drop sharply, giving up all the initial gains and dropping as low as 107.60 by the end of the US session. Now, I think part of the reason for this abrupt reversal is also due to the ongoing backdrop of global trade tariffs being imposed by the US on its trading partners, right? So there's a lot of other things going on in the background that are also causing prolonged dollar weakness. Because if you look at it on the daily time frame, the dollar has been pretty weak since the beginning of February, right? Even since the third week of Jan, when the dollar has been significantly weak since then. And that dollar weakness is playing out because we can see like a series of lower highs here, right? We see a series of lower highs. We can also identify a pretty decent uh, descending trend line, right? It's not the cleanest descending trend line, especially with this wick here on Monday, 3rd of February. We can see this wick jumping higher. But generally, we can see this trend line, descending trend line has been respected, right? So we can clearly see the dollar is under a lot of pressure, right? So despite a stronger than expected CPI result, we did see the dollar index spike. Demand for the dollar did surge initially, but it reversed abruptly, giving up all the gains and making a new low today as well. Right, so let's start the analysis on the daily time frame first to establish the key support and resistance. So starting with support, right, I would identify 107.49 as the first support. Why is that the case, right? This is actually a very nice overlap. I actually see a nice swing high taking place here at the end of November, after which we can see here this candle on 24th of Jan, stabilizing at the pullback level back then as price is falling down towards this level. 107.49 is a pullback support, but once this candle is formed, right, this creates a support and we have a nice overlap. Of course, we can see here on Monday, 27th of January, this week dropping as low as dropping just underneath 107. But we can see after that how this level has managed to function as strong support several times, right? On 30th of Jan, 5th of February, and today as well, it looks to have stabilized at around this level once more. So that is why first support for dollar index is at 107.49. It's a significant overlap. Now, second support, I would identify it here, right at 106. Why is that the case? Right, I see a nice swing high resistance taking place at the end of June 2024. Then once the bullish breakout took place in mid-November, this level function is a nice support here, right? Nice swing bounce taking place. So this creates a nice overlap level. But of course, over here, it's a bit messy. It's a bit messy over here. But generally, we can see that this level has functioned as pretty good as an overlap. So I would identify second support at 106.04. Okay, now that we have the support levels identified, we can now run a Fibonacci retracement on this uptrend here, right? This very significant uptrend beginning from the swing low on 27th of September, going up to the swing high on the 13th of Jan. When we take a look at all the fibs, we can see dollar index has already broken under 23.6%. So that's fine. We can't use that anymore. But we see 38.2% sitting quite close to the second support. So I would just use 38. 50 is simply too far, right? So we can use 38. and identify this as a support zone over here. Right now, resistance. When I look at resistance, right, I actually see a nice overlap level over here. Right, we see support taking place in mid-Jan, resistance here in the first week of February, right? Of course, this candle here on the 3rd breaks above it, but generally we can see this has functioned as pretty strong resistance. So I'm going to identify this as the first resistance at 108.95. And second resistance is simply going to be this swing high here, this swing high that has taken place at around 10th and 13th of January. Right, so once again, we're seeing dollar index compressed within this triangle, right? We see the overlap support at 107.49. We see this descending trend line. Price is compressing between this level here, between this zone here. So could we see a potential bullish breakout, right? Maybe we could, but generally the theme so far is significant dollar weakness. So I think we're likely to see this currency pair move, sorry, not this currency pair, this dollar index perhaps make a break. But for now, right, it's just sort of compressing within this zone here. So no real opportunities on the daily time frame, so to speak. Now let's look at it on the 4-hour time frame. On the 4-hour time frame, right, we can see it has indeed bounced off this level very nicely. So perhaps we do have a nice potential bullish bounce, a short-term bullish bounce that we can currently play. And take note, because it is price has okay on the 4-hour candle, on the 4-hour time frame, we can see this descending trend line doesn't look very good. On the daily time frame, it actually looks pretty decent. On the 4-hour time frame, this doesn't look very good at all. So I think that's fine. Does not complicate things too much. However, on the 4-hour time frame, I would probably want to identify this descending trend line, perhaps starting from here. This is how high does this wick go? Let me check. Okay, this goes as high as here. All right, so it's a bit not that clear. So I would identify a descending trend line based on the 4-hour time frame as such, right? You can see touching here, the swing high resistance on 3rd of February, and we see it touching here as well on Wednesday. So what this also tells us is, right, we've seen dollar index bounce off the overlap support, which is at 107.49. Right? So we may have a potential bullish bounce opportunity, but we can see that on a 4-hour candle, a 4-hour time frame, we have the combination of the red Ichimoku cloud and this descending trend line identifying a resistance barrier. So I would probably identify my take profit target at around 108. 108 is where I would identify take profit target. And I would also run a Fibonacci retracement from this swing high on 11th of Feb going down to the low of the day. Let's take a look at where 50 and 60% sits. Right, once again, this is another region that I would like to keep an eye on as well. So for anyone who may have caught this bounce, right, for anyone who may have caught this bounce on the dollar index, right, I would say, should it approach this zone here that's bounded by the Ichimoku cloud, the descending trend line, and the 50 and 61.8% Fibonacci retracements, this is where I would identify a potential take profit target. So at around 108 to about 108.10, right? This is where I would identify a potential take profit target for any long trades that you may have for the dollar index. Remember, it's continuing to compress within this zone here, right? It looks, I don't know whether if it's going to make a bearish breakout or a bullish breakout, but for now, right, it just seems to be inching closer towards this zone. So for now, there's not much real direction for dollar index. So take note, any bounce for anyone who's managed to catch the bounce and this has gone long, right? I would say identify your take profit target from about 108 to about 108.10 onwards, right? And at the same time, should this index climb higher, I definitely recommend moving your stop loss to the break-even point, which is going to be slightly above your buy entry, and continue to trail that stop loss should price continue to climb higher, right? Always practice good risk management for every trade. All right. Now let's move on over to gold, right? Okay, if there's no request from the floor, right, we'll move on over to gold. But of course, if you have any requests for any of the other instruments, such as the indices, or any other currency pair, please do drop them in the chat box, right? I'll be more than happy to go through the analysis with you. Otherwise, I'll cover gold, and then if there's time, I'll cover crude oil as well. Okay, so looking at gold, right? Once again, starting on the daily time frame, we can see it has made its latest intraday high on 11th of February, Tuesday at $2,942 per ounce. Kiwi dollar, all right, great. Okay, so I'll touch on Kiwi dollar once I've covered gold. All right, okay, so intraday all-time high here, and because we can see it's trading close to the intraday high today, right? Previously, we had also identified a Fibonacci extension, right? We had found a key extension level starting by running a retracement from this swing high on 31st of October, going down to the swing low on the 14th of November. Key extension levels sit at 127 and 161%. We can clearly see 127% has been surpassed. So we're just going to keep 161%. So this is where we had identified the first resistance for spot gold here. So you can see this is where pretty much exactly spot gold ran into resistance on 11th of February. Right, so that's how the first resistance has been identified. And for the second resistance, we need to switch over to the weekly time frame, and we're going to use a Fibonacci projection starting from this swing low here, point number 1, 29th of April. Oops. Remember, projection uses 3 points. Point 1 is on 29th of April, 2024. Point 2 is 28th of October. And point 3 is 11th of November. So now switching back to the daily time frame, let's adjust this starting at endpoints once again. And we can see that 61.8% has already been cleared, but we can see 78.6% projection sitting pretty close to the 161% extension. So we have a Fibonacci confluence highlighting a very strong resistance barrier here. We're going to get rid of 61.8% and just keep 78.6% and 100%. 100% why? Because this is where we can identify now the second resistance for spot gold, and that's at around $3,000 and $3,050. Right, $3,050 per ounce is the second resistance based on a 100% Fibonacci projection. And the first resistance is a confluence identified by an extension at 161% and the projection at 78.6%. Now, in terms of support, right, this level at 2,867 previously functioned as resistance here on Wednesday, 5th to 7th February. Pardon me. And then once the bullish breakout took place here, this level proceeded to function as support on 12th of February, creating a very nice overlap, which we can identify as the first support here. And second support is going to be based on this prior swing high resistance, right? This was swing high resistance at the end of October, resistance here on 24th of Jan, and then once the bullish breakout took place, it's going to function as a support. So we can identify this level at 2,790 as the second support. Now, with this uptrend here, we can run a nice Fibonacci retracement starting from this swing low, 18th of December, going up to the swing high on the 11th of Feb. When we look at all the fibs, we can see that 23.6% aligns very well with the first support and 38.2. So let's keep these two retracements on. And highlight this as a zone over here. Very nice support zones. So we've actually seen gold prices rebound off pullback support yesterday, right? Yesterday was the 12th of February. Wednesday, we've seen gold prices bounce off this level very nicely. So we actually have a bullish bounce currently in progress. And the take profit target is identified close to the Fibonacci confluence, which is the first resistance at around $2,948 per ounce. Right, so we've seen gold prices rebound very nicely, and you look at the 4-hour time frame, right, a very nice bounce took place on the Wednesday, 12th of February at the 10 a.m. candle GMT time, and it looks to be pushing higher as we speak. All right. Now I'm going to switch on over to the Kiwi, right? We'll take a look at the New Zealand dollar, US dollar. But before I continue, just going to launch a poll as well. Truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll continue the analysis on the Kiwi. All right, great. Great to see all the responses come in. I think that's uh, pretty much almost all of you. All right, okay, just keep the poll running for a little bit longer. All right. All right, thanks so much. I think that's pretty much all of you who have voted. Really appreciate it. All right, and now let's continue today's session. Right, okay, so let's wrap things up by looking at the Kiwi. So you can see that this currency pair has been in a prolonged downtrend since October 2024. Clearly see a series of lower highs and lower lows. And it also continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum. Right, this currency pair was previously also trading in a very significant bearish channel, right? It was trading in a bearish channel as well, but it looks like a bullish breakout has taken place here on 20th of Jan. And remember, the upper trend line of the prior bearish channel can function as support, which is what has happened quite nicely here on Monday, 3rd of February. That's why it's always important to take note of significant structures and trends, because these supports and resistances can work very well in the future to identify a potential support as well. So once the bullish breakout took place here on Monday, 20th of Jan, you can see price just moving sideways, but then it found support at pretty much the upper trend line of the channel, of the prior channel. Right, so that's why it's always important to keep note of these major patterns. And this is actually now a support line. What was previously a descending trend line or the upper trend line of a bearish channel is now actually a support level here. Now we can also see Kiwi running to resistance at around 57 cents since 6th of Jan, right? Clearly a very strong resistance barrier, right? And this is where we can identify the first resistance. Oh, well, pretty much here, yeah, at 57.02. Second resistance, right? Going to zoom out a little bit, and I see a pullback level stretching all the way back to it's almost like an overlap, right? It's almost like an overlap here at 57.68. So this is where the second resistance is identified. See resistance here, support here. We also see support here as well on 26th of October 2023. Right, so this is like a overlap resistance, almost like an overlap resistance at 57.68. Now, in terms of support, right, the first support is this swing low here that has taken place on 10th of January, 55.50. Let's zoom out a little bit and see if there's any other significant level. Actually, if you stretch it all the way back to this swing low here in October of 2022, right, this is actually a very significant swing low that had been formed back then. So this is where I would identify the first major support for the Kiwi. That's at 55.55. And it's pretty much exactly where it stabilized on 10th of January, and then again on the 3rd. Now, the second support, this might be a little bit tricky. Perhaps, well, we have to really go back to the March low, right? Go back to the March 2020 lows. So this is where I would identify the second support for the Kiwi, right? Going all the way back to March 2020, right? Nearly 5 years ago. Right, so these are the key levels here. Support and resistances for the Kiwi. Now, it looks to be pushing, dropping a little bit lower, right? It's not, we see that every time it's hit close to 57 cents, it's run into resistance and reversed. And every time it's come down towards 55, it's sort of stabilized around this level as well, right? So for now, there's no real opportunity, I should say, for the Kiwi, right? It's sort of like just drifting in no man's land. It's sort of like in limbo. However, maybe I could just go down to the 4-hour time frame and see if you can fine tune the analysis here, right? I see a nice swing low taking place here. Yesterday at around 56.05, right? This would probably serve as an intermediate support, right? This is probably intermediate support. So if this level gives way, right, 56.06, if this level gives way, right, perhaps we can see further downside action for this currency pair, and that should it break below this swing low here that has taken place yesterday, right, we might see it at least target down towards 55.80. So take note, it is sort of trending lower since 5th of February, but it's not really clear in the direction, right? But it looks to be trending lower, and I would say that if it can clear 56.06 and 56 cents, right, we are likely to see further downward pressure for this currency pair. Now, on this uptrend here, right, it's a very nice uptrend, beginning from 3rd of February, going up to the swing high here on the 5th. When I look at all the fibs, we can see here, yesterday, Kiwi finding support at around the 50% and then reversing. But of course, with these candles closing below 50, right, 50% is no longer valid. But when I look across the 61.8% retracement, I see another nice overlap, right? So we're going to keep 61.8% retracement here. And actually, you can see this is a nice overlap zone that's accompanied by 61.8% retracement. So take note, there's a couple of intermediate support zones for the Kiwi. First is this swing low here at 56.06. Second is at 55.90. This is an overlap zone accompanied by Fibonacci retracement at 61.8%. So if these levels give way, right, it's quite likely the Kiwi is going to slide lower. But take note, right, it's sort of, there's no real conviction or clear momentum, right? There's no clear momentum. There's a trend, right? We do see a pretty clear trend from 5th of February, right? Series of lower highs, lower lows, but we don't really see momentum, right? There's no real momentum taking place, right? There's almost like a nice bearish channel that I would point out as well, but there's no real momentum. It is sliding lower with no major momentum. All right, okay, so that's all I've got for you guys today, right? Thanks everyone for tuning in to today's session brought to you by IronFX. Do look out for all our upcoming webinars for next week. And I wish you all the best in the trading journey. And as we are wrapping up the trading week as well, right? Remember to spend some quality time with your family and friends of the weekend. Recharge yourself so you're all fresh for a brand new trading week on Monday. All right, thanks everyone. Take care. Have a great trading week and catch you all in the next session.